Welcome to Dime to Diamonds. I'm Suzanne Porske.
And I'm Mark Farquhar. This is being brought to you by Phoenix Financial Group, your pathway to financial success.
Phoenix Financial Group provides full-service solutions for all your financial needs.
We aim to be your comprehensive financial services provider, offering everything you need in one place. Welcome back to Dimes to Diamonds. I'm Mark Farquhar, and this is Suzanne Porske. Good to see you again.
Phoenix Financial Group. Yeah, it's great to see you again. Here we are, another week, saddling up,
I know,
sharing our wisdom.
That's right.
How was your weekend?
It's good. It's good. Did some stuff around the house, and
you have the whole clan home for summer. Isn't that awesome?
Yeah, I know. Yeah,
it's
awesome. It's awesome. We got weddings coming up, so got one coming.
24 is going to be the year that you're going to always remember.
Yeah, it is.
2 weddings.
Yep, 2 great daughter-in-laws.
A new grandchild.
New grandchild.
Going to add another girl to the mix.
Mm-hmm. We needed another little girl, so it'll be nice.
Your general manager, awesome, Kim Farquhar.
Yes.
I'm sure she's going to want another one in the tribe.
Yeah.
So you're getting 2 daughter-in-laws and a granddaughter.
And a granddaughter, yep.
Go, ladies.
They added to the female side, gained a few this year.
How many children do you have?
5.
And how many are girls?
My wife and my daughter, Kylie.
Right.
That's it.
So,
and Kylie's
4 boys?
as tough as the boys. So
yeah, I'd take her any day.
Yeah.
She's a tough one.
Yeah, she is.
Good girl. Well, we are excited today. We have with us one of my favorites, Rochelle. She owns Harps Accounting. And we met, not too terribly long ago, but immediately resonated towards each other. And so excited to collaborate with her, where she is assisting our clients. Taxes, I think, is one of the biggest things financially that's underestimated. People are really focused towards that retirement and building those retirement funds, and then
it's almost like they forget about the tax part, where they don't plan for that. They're more worried about accumulating, and then there's the whole tax
never
side
before
to it.
taxed.
Mm-hmm.
And all of a sudden they wake up and they have that, and then Social Security, which was never taxed before, is now.
In the 40s it wasn't taxed, and it just keeps creeping up, and probably see it again, increased again soon.
So without any further ado, we want to welcome you to our podcast, Dime to Diamonds. Thank you for being here.
Yeah, well, thank you so much for having me. I'm very excited. I'm very much looking forward to partnering with you all and hopefully sharing some insight on taxes.
Right. And also our common thread is I believe, to some degree, underserved women.
I agree. Unfortunately, I believe that the business world, the financial world, has not been as welcoming to women as it should be. I don't think it's intentional. I think it's unintentional. I think that men have just dominated that space for such a long time, and we're different.
Right.
We like to interact. We like to have conversations. We like to create safe places. And sometimes that doesn't always happen in the financial world for women.
Right. And like we've talked about, and this is kind of where we started bonding, I was like, did we just become best friends? When we said, we have these women that come in and their husbands have unexpectedly passed away, and now they are left trying to figure out what the husband was doing, and then they go to maybe their tax advisor and also their financial advisor, which were held by men because we are unicorns.
That is correct.
Yes. But they're not feeling heard. And that's understandable, because typically I'm finding, after 40 years of doing this, that men are very just singular as far as taking care of the wife, making sure everything's okay for her. He is providing for her. He's providing a safe place, a safe home, retirement, all that, where the women are thinking more generationally, more philanthropic. We're not just thinking about ourselves now. We're thinking about everybody else and everything else, whether it's our charities, our churches, or those things that are close to us. So there's that different, and that's where I think when I am introduced to a woman referred, and she's saying, I liked how it was going and it worked for us, but I don't feel heard now. And I'm like, I get you. And so when you and I started talking, you said, yes, you just had somebody come in, and the husband took care of everything, which is very noble and I appreciate that. Now I'm trying to incorporate the women more. And though they may not totally understand what we're saying in those original conversations, they know that they have an advocate, they have a trusted source they can come to. So
I also think they're more comfortable asking the questions, saying that I don't understand. I talked with a young woman the other day, and that was one of the things that she said. She was like, I'm going to ask stupid questions. And I'm like, no, there are no stupid questions, because if you don't know something, you need to ask and find out a better understanding of it. Yes, you may not have the grasp that the CPA has or that the financial advisor has, but you do need to understand how that's impacting you, and is it working towards your goals?
Right.
Both those are valid and advocatable avenues for people to want from their financial partners.
Right. Haven't you seen that, Mark, with clients that come in when
Right.
when they're seeing both of us?
I think it's neat, yeah, seeing both of us, because I think it's also important. You're right, though, the spouse or the wife may have different goals for that money than the husband did, and so that the former financial planner or the one the husband had may continue the goals that the husband had, and she may want to go a different direction. So I think it's important to ask
Right.
the women, and I think, it's easier. It may be probably easier for them to open up to a woman, because
Well,
they
we
kind
know
of
that.
understand each other, and it's helped my side having
Right.
you as a partner, because I think it has my lady clients open up more, and then you kind of relate to them better on what their goals want to be. So
Right.
it's
And it's
I
been
agree
nice,
with
and
you.
I know it's a compliment having you, because you're able to say, well, this is the direction, and this is what they want to do.
Right.
And I'm able to say, that is awesome. Let's get it organized. Let's get her on board. I'm not saying they have to hold hands and make every decision together,
Right.
but let's get everybody collectively working
Right.
towards the same goal, because life happens,
Right. It's just good having both sides of it working
Yes.
together.
Oh,
for
and the
client.
tax
So, yeah,
aspect of
yeah.
it. That, people, I can say this morning, I was stressed about coming and talking about it. I don't have a problem talking about it with my clients, but I get their stress. I can feel it just around that word. And then we have an election year that we're in, and then we have the Tax Cut and Job Act that's going away. And that, I am telling you, I feel like that is the big bad wolf that's quietly sitting there, and nobody is talking about it. And that's why I wanted to touch on that today. What happened with it? What happened in 2017 when everything was changed under that administration and that was passed?
So a big piece of that, tax brackets expanded. Those are going to remain, so that's good. But then there's the estate taxes. That threshold of your lifetime ability to not be taxed on a certain amount jumped astronomically. And it's about to go back to what it was pre the act. And I think people redid a lot of their financial planning with that in mind, because that was game changer. It almost doubled. And now people are like, do we need to switch it back? What do we need to do? And I think that's something that it's not being talked about, even though it is an election year, and all you hear is about tax, or we're going to cut taxes here. It's a great way for the politicians to engage with both individuals and businesses.
Right.
So they're going to talk about it. It's going to be in your face. But are they talking about things that are really important to making your financial plans and goals for the future?
Right.
And sometimes that answer is no. They're focused on what's going to happen in the next 4 years. Most of us are looking more in 20, 25 years. There are some people that it might impact immediately, but there's a lot of others who need to start planning now for the long term, for that 20, 25 years
And what about
out.
tax deductions? There we go.
Those are always coming and going, right?
Right.
So a lot of people, that's one of the areas where you can see it now and have a deduction, but in 5 years, they may take that away. And a great example of that was the $300 or $600 cash contributions for charities, that whether you did itemized or standard deduction, you were able to take that just right off the bat. Well, that went away. And I can't believe how many tax clients were like, well, what about my charity? And I'm like, I know, I'm so sorry, but that ended.
That's
So
at
that's
the ballot.
one thing that's
That was at the
already
ballot,
ended.
right?
Yes.
And people don't realize that, because you
Correct.
hear all of the other smut, I feel like, instead of how. But so we are not here to push any political agenda, but we're here to prepare people for it. And so I have people that say, when do I need to start thinking about taxes?
Today, yesterday, really, if we're really, being honest, taxes are every day. It's part of our life every day. When you go and buy groceries, when you go and do anything, you're either paying taxes or you're taking
Gonna have
in
to
money.
write it off,
Yeah.
right? And that's why I
So-
tell people, only think about taxes when you're spending or earning or saving money. Other than that, don't worry about taxes.
Exactly.
Because, and that's what I delight in the simple education when people are getting ready to retire. And Mark and I were talking about this. They don't realize that those never before taxed money is going to get hit and going to get taxed. So let's plan and prepare, because most people don't retire and just go away. They don't just go home and sit and watch TV all day. They're out doing their hobbies. They're out doing what they love to do, whether it's traveling and maybe blogging now. The lady, someone's able to blog, or her husband's able to start a fish guide service. I have somebody that's getting ready to retire. He loves tractor work. He has a tractor, he loves it. And so I'm like, let's open up a small business. And is that a good idea?
It is a good idea. It's always a great opportunity. If you're trying to make something a for-profit activity, then you should be able to take your expenses. You are only legally obligated to pay your fair share of taxes, not a penny more. So using the tools that we have available, people should dive into that and say, can I do something with this? If I try to make it for profit, then yes, it's a legitimate business and we can take the expenses.
Right. I'd like to talk to people before they're ready to retire and say, what do you love to do? What is that thing you look forward to on Saturday or Sunday or after work? And I had one that said, sounds silly, but I love to grow tomatoes, and but I have so much vegetables, so many things, I don't know what to do with it. And I said, what do you do with it? I just go around and I give it to people. And I said, let's find halfway houses. Let's find a woman's shelter that I was at. And let's find those places and donate it. And then also, why not can it and at farmers markets and make a little bit of money?
Correct.
Then you're having tax deductions for your
passion.
Right, for your passion. And so it's always a delightful thing. But that's one of the services we offer, is that kind of coaching with our clients. And I'm so glad you're on board now, because now we can just have a meeting all together. So it's just not us, because we aren't tax professionals. We aren't licensed that way. But having you right there with us in the office, and or in your own office if they want to go here. We won't make you spend all your time in our office.
Either way, it's very convenient to have a one-stop shop, and
Yes.
we're here to serve our clients, and that's what's most important, is trying to help them do what they want to do, be financially sound. We want to be the financial partner, and so if that's us together in one location, that works out fantastic.
Right. We found that statistically, planning for taxes in retirement can give somebody almost 26 more years if they plan right. We do have on the website that tax bill. They can go figure out what their tax bill would be if they do nothing. If they don't see you, if they don't talk about it with anybody, and they just pay it. They just put in super simple information, and it tells them how much they have in their 401k, in their qualified money, what their tax bracket is. And then they hit the button and it sends it to them. And this report, and we've seen it over and over again, where people are just astounded that they go, this is so simple. The tax deferred doesn't cost anything either. But if they keep it in qualified accounts, or if they start reallocating it and they start planning and preparing. I know on this one I just ran yesterday for fun, just $450,000. That's what one of my clients has right now. The assumed tax liability was 20%. The system gave it a growth rate of 5%, which, we definitely shoot for higher than that, especially with our cost of inflation. More than that, but
Right.
It was 5% on here. If they did nothing, it was going to be $411,000 in taxes they would pay. If they did something, it was $90,000, and that's not just for them; that's for the generations.
Correct. I mean, that's lifetime wealth that's being, accumulated, and then ability to pass it on, which is another aspect that people sometimes forget, is that right now, $18,000, if you're married and filing jointly, it's $36,000, can be given to a child, can be given to a daughter-in-law, it can be given to a grandchild. There's no limit to how many people you can give that money to, just that yours, and that's starting to distribute your wealth tax-free.
Right.
So there is an accumulation.
So where does that
wait until you
apply
pass
on the
away,
tax
yeah.
return? Is that
So
coming?
if you're 18,000 or the 36, you're not filing it on your tax return.
wonderful?
It
It
is.
reduces your
Nice.
tax liability.
And
So-
you can start distributing that before you pass away, and you can see the benefits of it right away.
And they can see the benefits. And then the last piece, which we all know we hate to talk about, but it can mitigate frustrations and bickering amongst
Right.
families.
We see that in almost every family we deal with. It's sad, but it's true. But that's
When
a
people
good
say,
point.
"Well, my grandchildren, though they're younger, they have their Social Security number, but that's where we are opening up those gifts to minor act accounts, the Uniform Gift to Minors Act account. And we talked to a client yesterday about that. You know, if you want to not leave it to their parents,
Correct.
then their parents leaving it to the children. If you want to just go to the children or go to the, like a daughter, I'm going to give it to my daughter and my granddaughter. Not that I don't absolutely love and adore my son-in-law, but it's just one of those. If you can pick and choose, and you can do that almost like estate planning.
Right.
And again, it goes back to reducing our tax, our exposure.
I think
on
the
that.
whole key to this is not wait until all this happens, but to start planning now, and you can take advantage of it right away. So
It's getting back to what we started like on our first podcast, which is getting financially organized.
Correct.
It really is. It's getting it and getting a direction. I think people hesitate to plan because they're afraid or it seems too much.
well,
it
kind
doesn't have
of the way lately is we don't do anything till a crisis happens. Then we're like taking care of it. So we need to get into that
Maintenance
mode of
mode.
taking care of it before
Well, and
it gets
sometimes
here.
it's perspective, right?
Yeah.
So choosing not to act in itself is an act.
Yeah.
Right? You
Yeah.
are choosing not to take that first step because maybe you are uncomfortable, maybe you're afraid, maybe you don't feel you have that knowledge.
But, yeah.
that's why you're reaching out to the
Right.
person to help you, build that roadmap for your financial future.
Right.
Right. Yes. And
That's
I
what
think
we
people
wanna
go,
do.
oh, I don't
Yeah.
have enough money or I have too much debt. They've already so that's where I let them sit. If those are all the excuses and that's what's keeping you there, then you're not our client. But if you're somebody who wants to get proactive and get educated, then we are here. And, as a great team. We were talking about RMDs. People do not realize you have a required minimum distribution on your retirement assets. Our government wants that money
Right.
taxed.
Or if you start pulling it out, they're like, "What? I have to take taxes out of that?" They're
Right. They don't
surprised
want
about
to.
it.
I've had so
The
many
retirement
Yes.
money. Yeah,
Clients have
so
said, I don't want this money. I don't want to take it out. And they want the money, but they don't want to
Pay the tax,
realize
yeah.
it. And I said, you have to.
Yeah.
And so like on here right now, like this is my report at 73, my RMD is at 26.5% of my balance I have to take.
Correct. And a lot of people don't expect that. They aren't even aware that it's coming. The other things, there's areas where you can help mitigate.
Right.
Right. So you can do a charitable distribution from your RMD to any nonprofit organizations. So that's, the 503Cs as well as church organizations and those type of things. So that's an area where you can say straight from my retirement accounts straight to those organizations. And that part won't be taxed.
Right.
It's not taxable. So you're able to mitigate and still do your charity work, still give back to the organizations that you're wanting to give, and both of you are receiving a benefit from that.
Right. And that's just, again, educating people and saying, hey, let's look at where your income is going, where your money's going. Okay, you're tithing or you're giving offerings. Let's make a little tweak here. Instead of you writing that check and putting it in a plate, let's take your required minimum distribution. This is that thing that's hanging over. It's going to come. Let's go ahead and put this to work here and then get that taken care of for the year.
Keeps more money in their pocket.
And
too.
it's a
Yeah.
deductible, yes. It's a deduction for them. They're not having to see
Correct.
that.
Right.
Correct. And, and it's not giving the money to the IRS.
Yeah.
It's that mitigation
Yeah.
that we want to achieve to the best of our ability.
Social Security.
Social Security. So a lot of people become very, very surprised when they come in and find out that their Social Security is taxable.
Is it 15%, 10%?
Ooh, it can be 50%. It can be up to 85%.
85. That's what happened to one of my clients.
Yes.
Then they held it
Yes.
for the rest of the year. They didn't send her any, and she got a big slap on the hand, and they said, you have to sign an affidavit that you're not going to make that much money next year, or we're not going to be sending you because she made over that threshold, and people do not know that.
And people are probably going to be surprised at those thresholds. When you're talking for individuals, for single individuals, the 0%, you can only make up to $25,000. And if you're a couple, it's only $32,000. That's not a lot
Money.
if you've done a decent job in financial preparation, retirement accounts. That ends up not being what a lot of people, they're way over
And
that.
we've seen a lot of people retire, and that company wants to keep them around for and then
Contracting
Yeah,
purposes.
for contracting purposes, and anyway, yeah, and they pay them pretty good too.
Well,
to
yeah,
do
but
that,
and guess
so-
what happens?
Yeah.
Social Security gets
Right.
taxed.
They get
Right.
taxed and they don't see it coming.
And what is Social Security? It's our overpayment. Like it's our money that we're
Right.
paying out every month. So it's really our money they're holding, and now we're getting it back, but we're getting taxed on it, and we're getting penalized if you make too much money.
Correct.
Because I do have a lot of people that want to go and not volunteer, but they want to go work part time at the school or do something, and they go, "Now, how much can I make?" I'm like, "Let's hit the 24 just in case it goes over. You don't want to get penalized. Don't make more than 24,000." And like you said, collectively, the husband and wife. And I've seen this where they have a LLC set up, and the husband is out doing his thing, and they're able to. That LLC is able to earn the money, and they are able to pull and stay under that threshold. Is that correct?
That is correct. If you have Schedule C income, you can also have some expenses that can, drain down that total amount. So then your AGI is below that threshold. So that is beneficial if you have that capability.
Right.
So that definitely is. But this is one of the big areas that planning for the future, legislative tax risk is very, very high. We can't predict what people are going to do, what Congress is going to change. They could eventually change it to 100%.
Right.
We don't know. So it's definitely something to keep in mind when you are doing different types of activities.
Right.
Yeah, people don't think about that. What are taxes going to be like down the road from a government standpoint? What are they going to do? And then the deductions, which ones are going to be there, which ones aren't. I mean, there's a lot of stuff to look at ahead.
There's some of the stuff I'm shocked that, like, I guess because this is our wheelhouse and we talk about it all the time, but they go, okay, what if I get this lump sum and I just pay my house off? Okay, let's stop. Is it an appreciating asset? If you need that money out, now you're on a limited income. Are you going to be able to qualify for a loan to get it? Don't even get me started on reverse mortgages. Those are been. I have not seen one case in all my years that has benefited the recipient of it, because that mortgage company is now the owner of that house. So it's a whole nother episode. But that's another thing where I'm like, time out. Don't just. I get the peace of mind of having
House
that, but
paid
then
off,
also the tax deduction. Is it going to be necessary or not necessary? But there's so many things.
Well, but even on paying off your house, interest rates. If you're talking, you recently refinanced and your interest rate is around 3 or 4%, what are you getting on your investments?
Well, that's what we ran into yesterday with the client
You know,
wanting to pay his house off, and he has
It's
a
opportunity
3%
cost.
mortgage. Yeah.
Yes.
Right.
You can spend that money, have it sitting somewhere else, and let it
Designated.
grow, rather than pay off something
Yeah.
that is not at as high an interest rate. So
Right.
sometimes there's opportunity costs that you don't want to go ahead and be completely debt free.
Right.
Right.
Right. And that's what I try to tell people. It's the peace of mind that you're looking for. We can establish that by putting this and designating this in a separate account, and also putting that in the estate planning. This is what I'd like done. The executor that's going to execute your wishes. I want this dollar amount to go towards this and pay the house off, and then they can take their time selling it if that's what they want to do, the trust or whatever. So, the white paper that we have available also on the website. Gosh, I found this so interesting. It's just basically the 5 ways that taxes can rise while you're in retirement, and then how to protect yourself. As we know, taxes can be lower for some people. They can stay exactly the same, or they can be a lot higher. It just depends on. That's why I tell people usually the first 12 to 18 months after somebody retires, I'm like, we're going to be talking a lot because this is new territory. You're going to go through the honeydew list, and that's going to probably require some money because she wants the paint changed and the floor stained. Speaking from experience. And then they're free now. They're not having to, work during the week. So that first, usually 6 to 8 months, I notice there's a little bit of nothing consistent or travel. They've been waiting to travel. So they're going to go take those, big cruises and stuff like that. And then things start settling out 18 to 24 months into it, and we start getting a rhythm. And so that's where I'm like, taxes might be higher, but that's where they need to talk to us.
Well, and they also have to consider sometimes people make more in retirement than they were making when they were taking a paycheck home. And that's something people don't always expect that first year. And they're like, I made what? And I'm like, yes, you made this, and we've got to have more taxes taken out. You got to watch those underpayment penalties. 10% if you've, paid in less than 1,000 of what you actually owe to the IRS. They don't like that. They want you to be a little bit closer than that. But that first year is very hard because when it switches from W-2 to now you're doing either, a pension or retirement money, or now you're drawing your Social Security, and sometimes people are making more money.
Right.
They didn't even expect that.
Yes. And the change in tax brackets, the deductions are eliminated.
Correct.
Another reason why I really kind of I feel like sometimes I'm meddling, but I'm like, there's a purpose here. There's a higher source. We had a lady yesterday. Man, she brought us some homemade sourdough bread.
It's so good.
That is the best sourdough bread I've ever eaten in my life. I'm like, I want to buy some. Now I want to buy it. Like, I wonder if she wants to start a little
She
business
needs to
or
go to
something.
Panera Bread and sell it because it was like
It was
amazing. It was really
mouth-watering.
good. Yeah, it was really good.
She said it was for her taste buds. Well, I guess we have the same. That, and she started raising chickens, and she just got a new chicken last week. And I mean, in my business mind, I'm like, we got a small business here. Come
Yeah,
on, girl. What
right.
else you got going on?
Right.
I want to buy your eggs, and I want you to make the sourdough, because the sourdough is good for our gut
Yeah.
health. So, the new taxes that are enacted, and then the way assets are taxes, like we said, could change easily. So, it's being in that just open communication with your
I think
financial
even
advisor.
after you're retired, I still think you need to stay in contact with both tax
Yes, and just the
CPA and your
ever-changing
financial,
landscape of it.
You do, because you would be surprised how many people decide to just sell their home and move to Florida. Well, you want to hold your house for 2 years or you're going to pay capital gains. So there's a lot of, strategy that goes in with what is it that you want to do? What is your financial goal? What do you want to do in retirement? What do you want to do today? Because there's some people that they want to spend their money today, and that's okay too. But how do we make sure that we
still have to have a plan? Yeah.
a plan for the long term? And that's where I think the financial partners come into play,
Right.
is helping people get from point A to point B as smoothly as possible.
Right, with the least amount of tax implications. Because once we start paying taxes and reducing that out of the savings account, it's not going to go as far. There's not as much a leverage for us to earn money for them if they are reducing it so much. So that, and we've had some of our people that get into retirement and want to buy a car, like we'll just talk about yesterday.
Muscle car, yeah.
Muscle car, or a Corvette. I had a client call me from the car show and said,
Right.
"Hey, I want to buy a Corvette." And I'm like, so we'll talk about it when you leave, and all the emotions around that pretty red Corvette, because is it going to be working as hard for you in the car, in your,
Well, you
but
could give your son the gift money, and then the son could go buy the car. You could use the car, and then he inherits it. Wouldn't that work out pretty good?
I mean, it's
mean-
a strategy. It's
there we go.
But how much is that car going to appreciate?
I know, yeah.
Maybe it appreciates at 5%.
Where's it gonna garage?
Or maybe it's
And
just 2%.
insurance. Yeah, garage and insurance, transportation, because they don't like to drive them. They just like to have them transported
Yeah.
to sit next to in a lawn
I
chair.
drive mine a lot, so I don't know. If I had one.
Oh, I'm like, what?
If I had one, I'd
I
be
feel
driving
like
it a
people
lot.
say that until they have one,
Right, 'cause
and
mine's
then
in
they're like,
storage.
I don't want anybody to throw
Touch
a
it.
rock on
Yeah,
it.
that's
I
true.
don't want it to get scratched. I don't want it to be rained on.
Yeah.
All of a sudden, that becomes a very precious little jewel.
Yeah.
And it's not always appreciating. But yeah, it's one of those things. Let's see what else we have here. Again, we talked about in 2017, Congress passed and the president signed into law that comprehensive tax reform, which was the Tax Cut and Jobs Act. It temporarily lowered tax bracket rates for most Americans. But this law and its lower brackets are going to expire in 2025. That means in 2026, those tax bracket rates are going to revert back to their older, higher levels. And that's my big push right now, is to get people in and let us talk.
It's going to hit a lot of
Because
people
we're going
when
to
it
probably
happens,
have, a lot of people turn off the podcast when we start talking and going down rabbit holes on taxes. And there's not a cookie cutter.
No.
Everybody is so different. Another thing that's coming to mind is marginal tax brackets, and how those are. We have a program, so we're able to go in, especially towards the last quarter, and see where people are sitting financially. And what's that threshold? And if they're getting close, then don't pull anything out of never before tax assets. But if they've got a little wiggle room, we start pulling them over and getting them out of qualified money and into non-qualified. We've got some programs right now that are paying a 20% bonus. So if they've got a 25% tax hit, they're going to offset that. So they're really pulling that out with only a 5% and a balance sheet at the end. And so that basically backdoor Ross or just going from qualified to non-qualified money. And again, those are one of those things that doesn't come up in every conversation, but after we get going with our clients, it's going to be nice now having you on board to say, okay, anything else we're not looking at?
Right.
You
Getting
know?
more eyes is always good.
And that's just another example of why you need to meet every year and plan, is because that 20% may not be here next year.
You know what I'm shocked at is our clients that go, man, I forgot. Yeah, this happened. Or I forgot that happened. Let's talk about when one spouse passes away. What happens tax-wise?
Yeah, so when a spouse passes away, the next year you still file married filing jointly, but after that you're going to be filing single. And those income thresholds are a lot lower, even though you've accumulated all this wealth together. At this point in time, you're filing single. So you're going to be jumping your marginal tax percentage. And that's something that occurs, and it can raise your tax bill.
Right. What about inherited IRAs from one spouse to the other? Those taxes that are there. And then, like we had one client, Jan, and she had RMDs that she had to take out, and she was
even when if you have a parent that passes away and you get their retirement account or their annuity, they're requiring them to immediately start taking RMDs. Even we've got clients that are 50 years old that are taking RMDs from inherited IRAs.
Well, and sadly, it happens to some kids that are in college. And what are they supposed to do? How are they supposed to manage and mitigate that? So that is a big piece, that planning,
right.
using the tools available. How could we avoid that? How can we take this money and find a way to get it to you without having to worry about that?
That's where I tell people, because we have some clients that come in and say, oh, well, I've got beneficiaries on all my accounts. That is awesome. That's a good first step. The better step is making that beneficiary your estate, making it the trust. Because I've had people that come in that we have so carefully got really close to that marginal line, that marginal tax bracket where it's going to jump, and they are the beneficiary, and they pass. Somebody passes away in November, December.
Changes everything.
And it changes everything. If it was put in a trust, then they have different tax laws, and they can take it at different times. They don't have to receive it right away.
Right.
So we had that happen to a family member, beneficiary on another family member's retirement. The recipient is on state aid because of disabilities. Kicked them right off of every program, completely changed the whole landscape of their life and finances. So we're like, time out. So we flew out to that state, got an attorney, and begged them to turn that check around, do not even negotiate it, and send it back to the institution so we could set up a trust for the recipient. So that trust and that tax ID was receiving that instead of the individual, so she could stay on all that care and aid. So those are the things I wish they'd talk about on the news.
Right. That's what you wish was discussed is, what are the risks? Where can we mitigate that? How can we transition wealth to the next generation in a manner that benefits the next generation?
And men are probably talking about this. I just don't hear it in our female circles.
Right. And I think that goes back to most men. You love your husbands. I love my husband. He's fantastic, wonderful. He's a provider. He takes good care of me. But sometimes it's to your detriment, right? Because they take care of everything and you're not aware. You're not involved in that. You're not seeing it. Excuse me. And being withdrawn from it, you're not even knowing that you should be talking about it.
Yeah.
You don't even see that side of things.
Yeah.
So, sometimes people help you, but it hinders, right?
Right.
The good intentions. But yeah, that's...
I remember you saying, make sure if anything ever happens to me, take care of Kim. You told the kids that.
Right.
And I'm like, yep. It's just letting those around you, like, these are my wishes. It's not fun to talk about.
Well,
necessarily,
and that's just
but
like,
it's responsible.
I think that's the guy thing. My father and the grandfathers were always like, we're just going to take care of it. We've got it taken care of, and don't worry about it. But that's something that, that my wife and I've done here, still doing it. And in the past is like, what are your passwords? What do you do about taxes? What do you do about these bank accounts? What do all that stuff. And it's very important to have that open line of communication.
I remember our client, her husband Bill passed away, and he had a self-directed IRA. And so he was playing in the stock market with it and doing well, having fun. That was his hobby. And he passed away. And then she's left with this hobby. It's almost like building a train and making it. And she's like, I don't know what to do. Thankfully, her son is a friend of yours, and they referred her in, and we were able to just wrap our arms around her and take her to the tax appointments. But in all of that, he passed away in December and never realized, because he was sick for a couple months before that, he forgot to take his RMD.
Yeah.
And so we were able, with our tax help, to get that forgiven at one time. Like, there's a lot of grief and a lot going on, but thank goodness she remembered it. Thank goodness we happened to have it on our radar. And moving forward, we're able to help mitigate the taxes and, like you said, all of that. So.
Well, and I think, a big thing that people need to have those hard conversations. They are a little uncomfortable because it's just something that we have made, I think, as a society, something to be uncomfortable about, but they shouldn't be. It's about being prepared and not, reacting, but being proactive. And then one thing I strongly encourage is to have a financial notebook.
Yep.
A 3-ring binder that has passwords, that has all the savings accounts, that has all your retirement accounts, that has the CD that you got 15 years ago that's just been sitting out there that there, but your wife doesn't or your kids don't. Have that. And I do think it's great to have a financial partner that you can say, hey, if something happens to me, this is who you go to first.
Right.
They know once you give them this binder, they're good to go.
Right.
They can help you get to all those points. And that's the partnership that, we want to provide our clients is that safety net for when the unexpected happens.
Right. And I think even the men, even though they're planning and preparing if something happens to their wife, I didn't understand that grieving brain until I went through it with when my dad unexpectedly died. You can't make sense sometimes of what's up or down. And so I think even men, even though they're in control of everything, it's still, they kind of lose that. They don't maybe realize that they're now going to be filing single.
Right.
And all that's coming. And that's why we tell people, come into the fold. Like, let us help you. Let us, navigate you through these waters, these unknown waters. And then they're going to get to test everything that's been put into place, for them. So as far as you've got young ones that are getting married, what recommendations do you make to newly married young couples with their taxes?
Newly married young couples or just any individual, start saving for your retirement.
Yes.
I really encourage people to do 12%. 22 would be fantastic, but for someone who's newly married, that's a stretch for couples. But
it gets it in that discipline area where they get it in there.
Yes, you get started.
Yeah.
It becomes a habit. Reach out to a financial advisor. They will work with you. You don't have to have $1 million. There are people that will work with people who have less money. Most individuals, most professionals want to work with someone who wants their advice, that wants to work with them, that wants to help grow. So those would be the two things. And then as they grow in their careers, always, anytime you get a raise, up that percentage.
Right.
If you never see the money, you'll never miss it.
Right.
So those are the big pieces that I would.
And we were talking about bookkeeping, like you offer that service. I know that I like to do the Quicken because everything is all tied to it. My cards are tied to it. My mileage, so every time I get in the car, it is doing that. So I have once a week go in there and figure out what trips were for me and just personal use and which ones for to the office and clients or out here to the studio. Do you recommend even younger couples, if you're going to have a side job or a couple jobs, to have that kind of financial organization?
100%. QuickBooks has some very simple quick start subscriptions. They're very, very inexpensive. Online, it's easy to navigate. It's user-friendly. It's an Intuit product, so it's intuition. But yes, as soon as you can get financially organized, that helps people go in and analyze your information to help you make those better decisions.
Right.
Tracking your expenses, whether it's personal, like if you're having personal and business, you do want to keep those separate.
Right.
I always tell people you can go get a free banking account. So set yourself up a business banking account free.
Right.
Have personal and keep it separate. It's a lot easier to audit, to go back through. But even people who don't have a business, it's not a bad idea to have a program or to use Excel to work a budget and to see where you're spending your money.
Right.
Because sometimes we spend money
Yeah.
and we don't even know it's going out the door.
Yeah, it's nice to have those because you don't realize you're going to Dutch Brothers Coffee 3 days a week.
Exactly.
The Golden Eagle. No, that's not a plug. But if they want to sponsor this
We're sponsored.
episode. Yes, I know for myself because I would go to the store and I was like, you get the ink for the printer and then the printer paper and all that. And finally I had to get 2 separate buggies at times, depending on where I'm going to be shopping. If Walmart wants to support this, they can, and I'll plug them. Anyways, but just separating it all and then
Yeah.
using a card for that and a card for this. And then it goes into the Quicken and it's just already sort of in the right place.
Correct.
It's and then it's easier for me to then give to the tax person, say, here it is. This is all of it organized, and then help me.
And the biggest piece is you don't want to miss something, and that's what happens when you're not able to separate. Is something will get missed, and probably not in your favor, probably in the government's favor, because somebody will say, well, that's probably a personal expense because it was bought from Walmart, and it goes over to the personal versus no, it was printer ink for your work printer. It should have been an expense. It was a legitimate business expense.
Right.
So organization in all aspects of life, financial life, is very, very important.
I know when I homeschooled the children, I had an a 501c3 I was telling you about. And so that's where I started getting that, like, okay, this is separate. Everything for the homeschooling. That portion of the house, is that still available to people today on small businesses, a portion of their house, if that room is dedicated to Senegence or homeschooling or Tupperware or I'm trying to think of all the fun.
Yes, you can have a home office. You can have a home storage. It has to be solely dedicated.
Okay. So nobody can sleep in there.
So nobody can sleep in there. I mean, it's to the extent that if you have a bathroom in there, none of your guests can go to that bathroom. That is a work bathroom. So there's some caution in that, but if you have a room that you can dedicate, and not that you have to lock the door, but that you are closing the door, and that is all work activity, then yes, you can have a home office expense.
What about a garden? What if somebody wanted to have a garden and sell their jellies and eggs?
Yeah.
Yeah, so that's a farm, and yes, you can have a company that operates a farm. It has to be for profit. So again, when we're talking businesses, you have to have a for-profit motive. It's great to have a business plan, but it doesn't have to be elaborate. We don't need a 15-page business plan of how you plan to plant the seeds and how you plan to, rotate your
crop.
But it has to show that from one year to the next that you are trying to improve on your finances, that you're trying to grow your business. And most people, that is what they are trying to do. So it's definitely an option and an availability to help fund your passion.
What about travel? What if somebody wanted to do a travel blog or, do that kind of thing? Is that possible?
It is 100% possible. Travel blog. So you're going to document how you are using your travel experience towards your blog, how that's funding your business. But it doesn't even have to be just a travel blog. Business owners have the ability to take travel expenses if it's work related. So if you go to a conference in San Diego and the first 3 days is conference, those 3 days can be used as an expense. And then say you decide to stay for another 2-3 days, those are your personal days. But those first 3 days and the travel to get there is part of your
Is a travel
company.
home?
Travel home is not part of the expense. The travel there.
Okay. So usually you buy one-way ticket, or not one-way, you buy round trip, so you split it? Mm-hmm. Okay.
Yes. And that's just a communication to your tax accountant.
Okay. Meals and entertainment?
Meals and entertainment, you're able to take 50%. So from a tax perspective, so, when you're doing your financials, you put the whole 100% in there.
Right.
But then when we come to tax time, you get to expense half of that.
Okay. Wonderful. And if I remember...
Key on all of this, documentation.
Right.
Yeah.
Keep receipts. Keep, what was your business purpose? You know?
I usually put on my receipt the person's name because I always thought, I'll just remember this later. So right then and there when I'm writing the tip out, I put the date because it helps me later not have to go look for the date. But the date, Emmy, and the client name. And sometimes if there's multiple clients, I'll flip it over and just kind of put a list and make my own little notes for it so I know. For years, I would just take a piece of paper, 365 pieces of paper, and then every day staple. Once a month, I go and staple the receipt to that date and just make my notes. But that is way type A. That's really pinging out. But it really helps me.
Yeah.
You know, it helped me get in some really good habits, kind of like counting calories or anything else. You start out, you really want to make sure to keep that going.
Now's an important time to consider your taxes in retirement
Yeah.
and start that planning. So you can go to our website, phx.financial. There's a white paper on there on
How to protect themselves.
Right.
The 5 risks that they may not understand or know that are out
Right.
there hovering over their retirement funds.
right. And then check out the tax bill. Go hit that, and then kind of plug in your numbers and see how that comes out.
Right.
That's another good tool on our webpage too.
Hey, what do we charge for people to come in and just talk with us?
Nothing.
Sourdough
We,
bread.
we enjoy. Yeah, there you go.
Good food.
We
good
enjoy
laughs.
people coming in. It's good to.
Right. So
That's the
thank
best
you
part
so
of the
much
job.
for being with us today.
thank
It has been delightful. Like we said, we're going to have you here more often, and of course, the office. So people can make an appointment with you. We'll have something on our website where how they can reach you, but would you like to also share how they can get a hold of you?
Yeah, so my number is 918-346-4649, as well as you can email me at rochelle.harp@harpaccounting.com. And I am so grateful that you guys had me. It was such a fun time
Fun.
talking about taxes. I know it stresses people out, and I just get excited, so I might be a little
you
bit of
go.
a nerd, but...
See, we do that with estate planning. It
Yeah.
stresses people out. I'm like, heck no,
Yeah,
we're
that's
going to get
fun.
you organized.
Yeah.
It's like getting in a cabinet and like organizing everything up, know exactly what you have, you know, and
Exactly.
then you can go anywhere. So taxes, I'm so thankful
Yeah.
for this connection because we've had other people in the past where we can say, hey, you need to go to see a tax person. Here's a few people we recommend. We have never had anybody
Right.
that has been able to come into the office and that we can collaborate. We're all on the same page and have that confidence
Right.
that
It's a
our
big deal,
clients
yeah.
are being taken care of. That's our heart. Our clients are our family.
Right.
And we would do anything to help them succeed. And what they're usually trying to save money for, which is their children and grandchildren.
Right.
And all that unknown that's ahead with taxes and otherwise. Doesn't have to be scary.
No, it
Not
doesn't.
when you have people like us in your
That's
back
right.
pocket. So thank you so much for joining us today. We are looking forward to any feedback. Hit up the website, phx.financial. There is so much good things there. There's blogs there. We kind of touched on one of them today as far as taxes in retirement. We also have events coming up constantly. So look at the event tab. We have taxes and retirement seminars. So make sure to check that out.
August.
Yes, in August. And I'm sure
That'll be posted soon.
yes,
Yeah.
months after that too. So thanks again and have a great rest of your day. In closing, you have been tuned in to Dime to Diamonds, sponsored by Phoenix Financial Group, where we provide full service solutions for all of your financial needs. We do this through organization and offering you everything in one place.